Welcome to the Killik Co podcast for April the 15th. We start today's market slightly to the downside. We had data out from China overnight, which recorded GDP in the first quarter at 7.7% growth. Whilst that number, obviously in absolute terms, is a great number, one that will be the envy of most of the Western world, it did come in slightly shy of expectations, and as a result we have seen some profit taken in some of those faster moving Asian markets, including Japan overnight, and that is manifesting itself through Europe this morning, where we're seeing just a little bit sort of further weakness. In terms of the diary, we'll take a quick look at the week ahead and what we can expect. Again, things are relatively sort of quiet here in the UK with regards to reporting season, but just highlighting a few features. First of all, we're going to hear from some of the mining stocks, Rio Tinto, Billiton. They'll be providing production reports. It's not so much about the production, it is about the pricing on many commodities, and we'll pick up a chart or two later on some of the weakness we are seeing in the commodity prices. Worth observing that these mining stocks at the moment are down around 15 to 17% year to date. That's Rio Tinto, Billiton, Anglo-American, and that compares to maybe 8-10% growth in some of the world stock markets at the moment. So you can see the level of underperformance now in commodities is getting to levels of extreme. It is going to attract attention. Obviously trying to buy markets when they're falling is often considered to be a dangerous game. We would certainly like to see some consolidation around these areas before putting a toe in the water, but I am observing that this is quite an extreme level of underperformance we're now seeing in the mining stocks. We'll also look out this week for Tesco. It's been rumoured at the weekend, or speculated, they're going to pull out of the US. It's cost them $1 billion so far, probably cost them another $1 billion to exit from the US. But it does show the new MD, Philip Clark, is making changes on the way that it's trading here in the UK, getting some good results, and putting his mark now back into the overall group structure, and maybe losing some of the legacy issues that were left by previous management at Tesco. So the shares not really sort of responding too badly at all to that announcement today. So just in terms of Killik research, last week we had some updated buy notes out on Volkswagen, Cobham and Tullow Oil. I'll also mention Wells Fargo, which is one of our prime picks in the financial sector. The US bank published some good results and saw a good result on its share price last week. So just as a sort of backdrop to the world as we see it at the moment, certainly we're getting no comfort at all in the Western world from economic data. Europe continues to perform very poorly, and some of those forward statistics and surveys are not coming through with any signs of particular life at the moment. And indeed we are seeing slightly disappointing data coming out from the US at the moment. Retail sales last week were published showing a 0.4% decline, where it's expected to be unchanged, and non-farm payroll data as well, showing some signs that the jobs market is beginning to slow. Equity markets, however, are sort of looking through that. They're seeing this as a sort of temporary blip. They still believe that the resumption of growth remains very much underway at the moment, and that means that US markets continue to hold very much towards the top end of the trading range. It's not the same case in Europe. Certainly the UK, as we'll look at a FTSE 100 chart, is indicating maybe come off about 5% or so from the peak. Similar position in Europe at the moment. So some real different performances coming through, and we do have to bear in mind that currencies are moving around quite sharply at the moment, and they need to be taken into account as well, particularly when you're investing overseas. A lot of commentary at the moment about gold. It's a case of, is gold losing some of its shine at the moment? Two reasons, possibly the fact that the end of the world is possibly not round the corner, and hence some of the sort of momentum that was seen in gold around the time of Europe last year is coming out of it. But we're also hearing that there were some potential sales coming through from Cyprus, and that may well have been aiding some of the falls. This is the gold chart, and you can see the very sharp decline that is taking place there at the moment. So in coming back to some markets, I want to sort of continue the focus on Japan, which remains a theme for us. We're very familiar, of course, with the economic changes that are taking place within Japan at the moment, which is really sort of pushing the value of the yen down and equity markets up, and it really has proved to be the best performing of the major markets during the course of this year. We have to just temper it slightly by saying that obviously the net impact to a sterling-based investor is is the fact that you lose some of the currency gain on the equity markets that have moved forward. So if there are any ways of hedging currencies, that is quite important in that. But there's an undeniable uptrend there at the moment, which whilst will continue to attract some form of scepticism about the impact of what's happening within Japan and the economics of Japan at the moment, there's no question it is having the impact on the currency, and of course that is impacting very nicely indeed on the potential competitiveness of exporters. So we're really trying to focus our attention on the course of those stocks that will be benefiting from those trends at the moment, and as a result we are continuing to on the investment fund side continuing to recommend CF Morant. So if anybody wants a copy of the chart, a copy of the research note that we have on our favoured fund within Japan at the moment, there's the price chart. It has continued to perform very well in line with those markets. So coming back to other things, well, the US market I mentioned is continuing to hold very much towards the top end of gains. That's despite the weakening economic data there at the moment, but corporate earnings continuing to drive that ahead. I mentioned Tesco very much trading towards the top end of top end of its trading range there at around 386. Results there on Thursday. This is the Wells Fargo chart. We mentioned it's our preferred choice at the moment within the banking sector, the US bank, and we would continue to buy Wells Fargo in light of the results that were published just last week. In terms of final comment from me is the FTSE 100. We are seeing some weakness there at the moment. It's not a clear-cut picture for the FTSE 100 because it is so much more weighted towards the mining stocks compared to other indices at the moment. And as I mentioned earlier, those mining stocks are down around 15% of the year. So the FTSE is having to absorb a fair amount of drag to its performance so far. And of course, so the underlying tone is a lot better than I think those indices are telling us at this current stage.